We're breaking down a big change that's been making headlines, the new no tax on tips law. So, if you're in hospitality, restaurants, or any job where tips are part of your paycheck, this law could put more money back in your pocket. But what does it actually mean? Who does it affect? And are there any catches? We're diving into all of that in this episode. I'll be asking Caitlynn the questions that you've probably been asking, so you'll walk away with some clear-cut answers. So welcome to Unfiltered Profit. I am excited for us to dive into this topic. Caitlynn has been following the new tax bill very closely and keeping all of our team here apprised of what's in it, what's out of it. Is it 2026? Is it happening in 2025? We're all basically on the edge of our seats over here with anticipation and excitement for what is going on in the tax world.
Yeah, I think it's like one of the first years that like a tax bill has drum up so much interest, and I'll take it. I'll take the interest.
Yeah, and some of it's great changes for us
Yeah.
as accountants. I'm very excited about some new 1099 rules rolling out for the 2026 tax year.
Mhm.
But today we're focusing on tips and
Yes.
specifically the tax on tips. So if you get tips as part of your paycheck, that's what we're diving into.
Yeah.
So first, what is the basis behind this? Like, who are
Yeah.
we really focused on? All that fun stuff.
Yeah. So the history behind this one was on the campaign for the presidential election. I believe President Trump was in Vegas, Nevada, maybe just somewhere in Nevada, which is a highly tipped state. And so at that point, we heard the promise of no tax on tip income, the idea being that it would put more money in the pockets, and the campaign promise was delivered on in this OB3 bill that was passed in July. That is kind of the history of how we got here, because it's a unique one. We don't usually hear something as specific as this. Usually it's incomes that we try to protect, but like we've never really seen like, hey, we're not going to tax tip income. I will say the no tax is kind of a misnomer, right? So as your payroll is getting processed, as your tips are being paid out via payroll, the tax is still going. The idea being that on your 1040, there will be a deduction for tip income so that you can pay less and therefore ideally get a refund.
Yes. So I think that's the big thing to key off on is that you're going to feel like nothing changes because you're still getting taxed in your paycheck. But
Yes.
come April, if you file on time, which we'll talk a little bit more about that piece, I'm sure. But from whenever you file, you should expect some sort of refund from the tax that you've been paying
Yep.
on those tips.
If you have left your withholding as is, because the IRS didn't change any of the withholding tables, this is in effect for 2025 and it'll sunset after 2028. So sunset meaning expire, pending no action from Congress. So Congress always has the choice to extend these. As of now, though, it'll end after 2028. So 2029 would not apply. So yeah, that is tip income. I think to start with, you like your industry or your job has to typically have historically received tips. So that does not mean that we can now reclassify all of our services as like social media managers and say, I charge $10 and they tip me $2,000. That's not how this is going to work, and it's not going to fly.
Shocker.
I think that was like the first thing I saw blow up was like, oh, but what if? No. You have to typically receive tips. They also have to be reported. So if we were under the table, cash never reported on a W-2, a 1099, if reported somewhere, then you're not going to get this deduction. So there kind of has to be the form to match the deduction piece.
Yep. 100% makes sense. And so some services where we usually see this, obviously, and this is America where we tip a lot of things, whereas, there are other countries out there that do not. But restaurants, salons, makeup, hair, all that kind of fun stuff, bars, delivery drivers, big fan of Walmart grocery delivery right now. I get asked every time what kind of tip I'm going to give. And,
Yes.
a lot of those services, since payments have become so electronic, tips are electronic. And so we probably have more compliance in tip reporting in this electronic industry than they ever did, prior to, I don't know.
I would agree. Before like the rise of credit cards, I would say these days we probably see more credit card than anything. And that is what will give you that deduction. So it is in your favor at this point. And the nice part is that tip income, because there is a separate like Social Security reported on tips line, like this is easier to track and to keep abreast of as opposed to it getting buried somewhere. We'll have another episode on overtime. So that one's harder, but tips are a lot easier actually to track and say, hey, this was my actual tip income on my W-2.
And remind me, is this applicable for 2025?
Yep.
Or is this starting 2026?
Yeah, this year. So 2025.
Okay.
And so when you file your return in January through April, it'll be on there.
Okay. Awesome. That's good to know.
Yeah.
So let's talk about what is actually tax free. So are we talking like this is income tax? Is this Social Security and Medicare? Just like let's break down that piece for everybody.
Yes. So this is income tax, but it is below the line. So that's a little technical term, but it's after we calculate AGI, and you do not have to itemize in order to get this. So it's going to be like a new line item somewhere, a new schedule where you will get the opportunity to deduct up to $25,000 of tip income.
If you're married, or is it 25,000 for single?
Oh, 25,000, whether you're single, married, head of household, no matter your filing status, 25,000 annually.
Okay.
Yeah. And there are some people who that's like significant. Your income is significantly based off of tips. So
yeah,
it is a good amount.
That is a good amount. That's nice to see. Okay. So when we're talking about all of that aspect of it, so as you get your paycheck, you're still getting taxed like normal, still getting Social Security, Medicare tax on it, your federal withholding, state withholding, all of that's happening based on your tip amount. And then when you file your tax return at the end of the year, you're going to be eligible for this refund because you get this below the line deduction. Yep. However, we've already recorded the episode on overtime. So I'm kind of playing into that a little bit. Since it is below the line, we're still going to have some impact on tax planning, right? Because of the way that our tax planning is based off of that AGI, right?
Correct. So even like whether you qualify for this is pretty much based off of your AGI. It's MAGI, modified AGI, but the things we modify aren't common anyways. And so your AGI being over 300,000 if joint, 150 if you're single, would start to phase out this deduction.
Okay.
If you're looking for like, can I contribute to a tax deductible IRA? So like we can't use this to help us tax plan in some of those aspects. We are still reducing your income tax bill. We just can't do maybe as much as if it was what we would call above the line, where we get to adjust your AGI down.
Okay. That makes sense.
And it's also available for Schedule C. So I think that's important too, because a lot of these businesses are like Instacart drivers or beauty salons. Maybe you're a sole proprietorship of like you own your beauty salon. You can still deduct your tip income, even though it all like you don't have that W-2.
Okay.
And you can't, the only thing is you can't go below your net profit. So that is something to keep in mind. If your net profit was 5,000, your total tip income for the year was 7, well, you're limited to that 5 of deductions.
Okay. That makes sense. So from a reporting standpoint, this will be for people that are receiving a W-2. From a business owner standpoint, it's showing on their profit and loss as tip income for us to be able to see that. So the reporting has always been there. It's in the softwares that are used for payments and all that. So easy to track, unlike our overtime episode where things were a little bit more convoluted out there.
Of course. It's never like as easy as we would like.
Yeah. Yeah. And so there's nothing that businesses need to change for this tax change, right? The payroll is going to be the exact same. So business owners out there that have a business where their employees earn tips, nothing changes for them, right? This is all in the personal return.
As long as the businesses are reporting it appropriately. So that's the other thing, right? So like if historically, though not accurate, you have been under the table tipping your employees, you may have very upset employees when they realize they can't deduct their tips. So that is something like it is in your best interest to report this all correctly. As a business owner, tips don't really affect you anyways, right? Because you put them on and you pay them out.
Right.
So it's not changing you as the business owner, your taxes. So it is a great time to make sure you're doing this the right way.
Great. And if you have problems with your system for that, there are plenty of people to consult and help with that. There's great software. We have no limit on software nowadays to help make sure all that type of reporting is done easily and accurately.
Yeah, I would for sure. Big business owners, you'll be fine. But like the smaller sole props, just making sure you are using your software to the utmost where it will divide out what was service and what was tip. Because if you had historically lumped all of that because it didn't matter, well, now it does. So I would definitely make that effort in your reporting to fix that. And you still have time. Like, go back and fix it for 2025 if you had been reporting it as one lump sum.
And some of that probably is a little bit more challenging. I'm thinking like of the sole proprietors, right? Like
Yes.
they're not receiving a W-2. They
Right.
just have their financial system that's recording their accounting. You're the ones that this is going to be a little bit more important to make sure that reporting is right, because it probably historically, it just hasn't mattered. And now it does. And you
Yes.
want to get that tax benefit.
Yeah, because otherwise you are for sure paying too much in income taxes. So if you can figure that out and get it adjusted sooner, then maybe your Q4 estimated payment could be lower and you won't owe as much, or even potentially get a refund if there's a W-2 in your family. So I would for sure say it's like the sole props that need some planning around this, more so than the W-2 employees or the bigger businesses that, like the restaurants and stuff, that use a Toast type software that track all of this for them.
So for the people out there that are just employees, they don't
Mhm.
own a business, do you think that there's anything they really need to do to be proactive come tax time, or all of this is reported on their W-2, and as long as their preparer is up to date on tax code, they should be good to go?
I really think they should be good to go. It would not hurt to pull pay stubs though and just cross check at year end, make sure everything came across the right way. But this one should be less cumbersome for a W-2 employee.
Okay, awesome.
Yeah.
Any key takeaways or anything you want to add in our wrap up that we haven't been able to hit on for this one?
Yeah, same thing. If you listen to Overtime or OB3, the podcast I did a little bit ago, you have to have a valid social security number. So that has been the hard hitter on a lot of these, is that it's a valid social security number and an I-10 wouldn't qualify.
Okay, good to know.
Yeah.
Well, we're excited to dive into more of these tax tips in future episodes. If you want to get some of our favorite tax tips, please make sure you go to the link in our show notes and sign up for our newsletter. We're always trying to share our best tips. We're not keeping anything a secret over here, and we appreciate you listening and always welcome any questions that come up.
Thanks, guys.